Hello guys, welcome to the Train Parrot. 4 days ago we were talking about going into the low 60s. Congratulations to every one of you that have been watching the videos, staying engaged at these times where Google Trends is showing a lower low in terms of engagement in crypto. The best opportunities happen when most people are looking the other way. So don't be one of them. In today's video, we're going to talk about two scenarios. One scenario where we can hit higher prices. There's one pattern that is currently in development, and if it gets completed, at the very least, we could get to the 64 range, and that's not necessarily the top limit. That's just the first initial conservative target for this pattern. Of course, we are currently in a downtrend on the 4-hour. We are seeing lower lows and lower highs, so the odds are favoring the trend, which is down. We are keeping a very close eye every time we are hitting resistance. I'm letting you know via Twitter so you stay informed and you know that we are approaching a new challenge and we could get dumped to lower levels as well. I'm gonna cover all the liquidity. There's some whales playing some tricky games with the levels of 52 to 59. You must stay informed if you're taking decisions. On the weekly, I'm also gonna cover my take on what's going on with this hanging man that was looking so bullish, but right now there's some things that are diverting from the typical pattern that we have seen the previous 4 times that we have this pattern, meaning that increasingly I'm starting to lose my faith in this hanging man being the pattern that reverses the trend to the upside. The big whale explorer is also signaling something very important for people accumulating. I'm going to cover the short-term holder realized price, and I'll show you how important this indicator has been throughout the full bull market. I'm also going to cover the long and short-term holders. Both of them are following the same pattern at the moment, which is extremely rare. There is one level that is back with liquidity in the last 30 days, and it's very likely that we're going to hit that level. So do not blink, because it's very likely that we go to that level and then later you're going to be hitting yourself with a brick. How come I didn't listen? I'll let you know whether the shorts or the longs are more in risk at the moment. I'll give you an update on the trading bots, so do not go anywhere. By the way, there's another reminder that the picnic subscription to the TTP community has become free, and that's gonna stay like that forever. It's not a trial. If you go to my website in the landing page and you scroll to the bottom, you can click what's included full detail. And if you expand picnic, you're gonna find a long list of indicators that are all for free. If you find any of them useful, feel free to use them as much as you want. Once you get access to the indicators, I do recommend that you join my Discord server. The link is in the description. In that way, you're going to have access to a big community, not just of manual traders, but also like-minded people that are aiming to use indicators, backtesting strategies, and share new ideas and knowledge. So I'll see you there. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell, and do not go anywhere without leaving a comment down below. So the most important time frame right now, and all the time really, there's no exceptions, is always to look at the monthly. Some people look at the 2-month. That is not my thing, but I have to admit that it's giving some really ugly signs in terms of the continuation from where we are. Whether we're going to get a second top later on in the market after this ugly candle in the 2-month, or Bitcoin is going to play against all odds and break above it, which is very low likely at this point in time, just looking at this candle. The monthly is not looking much better either. You have a red engulfing candle closing in April, and now we have an indecision candle right below the resistance. I have to be truly honest. Just by looking at this pattern and without any bias, if it was any asset and I was looking at this, I will say it's very likely that we're going to the low 50s, if not to 48. Of course, these are just probabilities, and even if we have 2% probabilities of going higher, that can still happen. My point is I'd rather not trade on a scenario that has such a low probability. Why? Because there are many other scenarios where you have all the odds in your favor. The risk is smaller, and that's when it becomes really worth it investing more. We're in May and we are barely in a green candle with less than 1% for this month so far, and we are 1/3 of the month. So we'll have to see if we manage to overcome what happened in the previous 3 Mays that were all red. After seeing so many patterns in the charts, I start seeing patterns absolutely everywhere. And there's no exceptions with the Fear and Greed Index, where I'm currently seeing that there is an inverted shoulder here ahead and a potential new shoulder forming here. Since this is an inverted pattern, it will be pointing towards a move of the Greed and Fear Index into the extreme greed. For that to happen, this index should go above 70 first, and after that we could go back into the 90s. But if we continue this trajectory going to the lower end and even breaking below 43, of course, the scenario gets completely invalidated. In terms of liquidity, as I mentioned in the previous videos as well, the only thing that has been looking slightly more bullish is this breakout in terms of liquidity in the China market. It looks quite promising. As you can see in these areas here, sometimes you start having some breakouts as well, but that doesn't guarantee necessarily that you're going to immediately after start a significant increase in that liquidity, which is ultimately what we need in order to get another push like this. Still absolutely worth keeping an eye on this if you want to stay informed with these patterns on the liquidity, on anything that really has a significant impact in the trend of Bitcoin and in general of all markets. Make sure that you're subscribed to the channel and that you follow me on Twitter. My handle is Trading Parrot. The Federal Reserve liabilities, they've been disposing of them, breaking from this bearish flag, so that is not bullish at all. I'm waiting for the next candle to see if this comes for a retest or if it's actually going to come back inside the pattern just like it did around here, which will be really bullish. I will let you know if that happens. And as I shared in yesterday's video, we have this beautiful breakout after over 2 months being below this resistance. And I was anticipating that before we break this new resistance represented by this white line, we were going to come back here for a retest. But I do not take for granted that the retest is going to succeed. In fact, it could break below this range and then continue into a massive sell. That is low likely. It's an extreme move if it happens, but I'm keeping an eye on whether this could play out as well. I never take for granted any retest as successful. Of course, the happy path is to come here and then start making a higher high right after that. That is going to shake out loads of shorts that currently are piling up. I'll show you later in the video how many shorts there are in the market and how can that impact in this bullish scenario that I mentioned in the beginning of the video. I'm going to show you the support on this trend line is at RSI 40 and the resistance is at RSI 53. That in terms of price is represented by the sandwich between the red and the yellow line. So at the moment, our resistance is located at 64.6 and our support is located roughly at 60K. So far, we've been doing lower highs and lower lows on the daily. And after this lower high, what we should be expecting for continuation in a downtrend is a move that also gets to a lower high, and that will be in the range of the 55K. Of course, if it meets again with 57, 56.6, that will be a double bottom, and that's actually bullish. But as I mentioned, our support is 60, and that coincides with the successful retest of this pattern. So that makes it very easy. Anywhere below 60, closing the daily is a really bad thing and it takes us into the 55K area. But if we hold at 60 and we start doing higher highs on the RSI, we're aiming for higher. On the 4-hour, things are much more in detail and I can see a very similar pattern going on. We have the breakout here and then we're coming for a retest of this trend line that we broke above on the 3rd of May. So far, we are holding it and I'm paying close eye to 2 trend lines. The dotted trend line, which a breakout will be bullish, it could potentially end again for 62 as a resistance, or a bearish breakout, which could happen if we lose this support and we continue and end up printing a lower low in the RSI as well. Since this is the 4-hour and it happens at a much faster pace than the daily, I have set up alerts both for breaking above this trend line and this one in yellow here as well. Either of them that break out, as long as I'm awake, I will let you know via Twitter. Those are critical lines. You can see that support has been tested 3 times already, so they're definitely going to influence my next decisions. You can follow them either by joining my Discord server and getting access to this special version of the TTP RSI. Once you join my Discord server, the link is in the description. Ask my team for where to find the source code, or if you want to add it into your trading view and follow the latest versions of the indicator, that's also fine and it's free. On Total Free, we're doing a very similar thing and also monitoring a potential bullish breakout from here. Earlier today at 2 a.m. we got rejected once again by this trend line and we are currently pointing down. So again, I have alerts set up for this in case we do something like that, or if we start challenging again from where we are. Alts are not going to perform really great as long as we stay below this trend line in a channel that is still losing momentum. Yes, there is a little bit of sideways here. That's why I'm tempted to say that there can be a breakout from here. We will have to see. The market looks slightly divided. There's a few outliers performing well as usual, but the vast majority is in the red. On the weekly, there's something that is increasingly more concerning every day, which is, yes, we have a hanging man pattern here that was very bullish in the week of the 29th of April. Everybody was singing victory after this. Many influencers that are big on YouTube included, but there's one single thing that is new in this specific scenario where we are. Yes, the pattern is a large wick to the downside, even larger than previous times, as you can see, but in this case it's the first time that right after that pattern there is not an immediate reaction to the upside. In this scenario here, you can see that the reaction was right in the next week. And there was no time where the price went into the middle of the week. In this, the reaction was massive. This one was slightly bearish again, but it stayed above the body of the candle. And this one here, my friends, is the only one that doesn't immediately react to the upside. We are on Thursday, so there's a few days left for this to get undone. It's gonna look bullish if it lifts a week to the downside, but if we close this week in this state, it's not gonna look as bullish as the previous times that we have the hanging man. And that's something to consider because people are very emotional and very reactive. So this could be a manipulative move to shake them off and then continue to the upside, but it could also be a pattern that is showing weakness. So we have to stay on top of how this candle develops. On the 1 hour, of course, is a lower time frame, less significant, but I have to mention here that we have formed an inverse cap and handle. The neck is located at 61 and the target is pointing to 57. I have to say we are on a verge of breaking below this pattern. You can see that all these weeks were holding us and we are now below the support. So be very careful because this pattern is gonna love to fill all these fair value gaps that you have on the left hand side and then reach the bottom of this price as well. On the daily, we are also forming this bullish pattern. Currently we got rejected, so this should come back into the lower range, and that is consistent with 57. So if we get to 57 and we hold there, that could be the bouncing point, and this target comes from the 1 hour. So there is confluence in terms of this potential outcome as well. In terms of liquidity, we have at 65 located here and a little bit of new liquidity at 61.7. On the lower end, it starts from 61. We have a 58 and a 56. And the Big Well Explorer is doing a lower low here. That is actually bullish because the lower we go below the ratio of 1, it means that there are more large wells that are withdrawing compared to depositing. At this extreme of the market, when we were at 73, pretty much all wells were depositing. And that's pretty bullish because it means that the vast majority of the wells are currently withdrawing. And that's usually interpret a bullish signal. In one of my past videos, I mentioned my theory that the support on this particular indicator has been going on a stair to heaven here. First holding at 0.25, then at 0.5, and currently at 0.75. So by steps of 0.25, we keep going higher on this indicator. And I'm expecting that there should be a bounce at 70, at 75, just like we did in the past times around here. That's kind of the behavior that we've been maintaining here. Of course, this level can get broken if we start a strong downtrend or a capitulation event. But I am paying attention to that level almost on a daily basis as an amazing level to start also accumulating more aggressively, mimicking what those big whales are doing. The short-term holder realized price, if I zoom out around here, you're gonna see how multiple times the price went to flirt with it. This time it bounced right from it. This time it bounced from slightly below. And in here we remained for a while below it. But then once we went above it, we started this massive rally that took us to 73. More recently, we spent one day below it and we immediately bounced to 64 from 58. So that's a 6K move to the upside. I'm keeping a very close eye on this indicator as well, because this indicator in bull runs, it acts as a support, and then in bear markets, it's a strong resistance. So what we don't want is to lose it and then face it and get challenged by it, because that forecasts continuation to the downside that spans for many more months compared to if we go back above it. I will continue monitoring this and giving you updates in this channel. MACD monthly bullish crosses are extremely important in every single cycle in the past on Bitcoin. And the past one that we had was in July of 2023. Since then, we went 148% to the upside. But there's a very interesting pattern when we focus just on the histogram. Every single cycle has a small bull move in the histogram at the beginning of the cycle, the halving event. You can barely see it here, but this went into the dark green, then into the light green, then there was sideways, and then the actual bull rally that gives the most returns. If we focus on this cycle, we also see this green going on here. That's the first peak. Then we have the sideways represented by this light green, and then the actual rally. On this cycle as well, we have this peak at $240, then all these months of sideways, and then the final blow of top. So if we go to the current cycle and we were to apply the same template, expecting naively that we are gonna repeat the same past performance, we could say that we are in here in the first peak of the histogram, and that this should cool down for many months and then eventually do a higher high somewhere at the end of 2024 or 2025. Let me know if you interpret this in the same way or you think that this is the end of the bull market. I'm starting to see some people in YouTube speculating that 73 was the top of the bull market and that's it. There won't be any more bullishness until the next cycle. Anything is possible, but I think the odds are higher for a second top in this market. Of course, I can be absolutely wrong. In terms of the long and short-term holders, usually one of them is doing the right thing and the other one is doing the wrong. Guess who's always doing the wrong thing? The short-term holders. And currently, the long-term holders are starting to show a slight increase in their holding. Very interesting pattern to see here. It's very mild. It's not necessarily something to say, okay, this is the bottom. But starting to see long-term holders with slightly more conviction is always something nice, and at the same time that the short-term holders are starting to feel the pain and starting to sell as well. Notice that the last time that happened in the previous bull market, around here, the selling started from the top and changed during the correction, and then they started accumulating more aggressively, but after the market crash. Then they started aggressively buying again. And of course, the short-term holders, they started selling like crazy. If there is a crash and we observe a pattern similar to this, I'm planning to mimic as well what the long-term holders are doing, and we won't be the silly ones that are actually selling into the lower prices when everybody that has big pockets are doing the opposite. If we are to mimic someone, at least mimic the smart people, not the dumb ones. On the weekly, we can see that there's a level of liquidation at 60.3K, and in the last 3 days, the largest level of liquidation is located at 64.8. Now, if we go into the last 30 days, I usually look for the highest level of liquidation in the past month. And in the recent videos, we used that on the lower end and we went straight for that level. The most difficult part is to forecast what's going to happen first. But usually the price tends to go to the most heavy level. So let's try to find what is that level. Currently, the highest level is 64K, so there is an argument for the price to go there and take that liquidity, just because going into this lower end here at 56 and 57, yes, it's significant. There is almost 2.4 billion if we go there, but if we go to 64, 2.2, but the price needs to move less than 4K to get there. So at least doing just that basic math, I speculate that there is a big chance that we could go for that 64. Currently, we don't have the funding fees necessarily in our favor. We are in the green. Whenever we have a big funding fees in red, that is a big bounce. Maybe the price is going to go first to 60, liquidate some of those people, get a lot of extra shorts into the game, then the funding rates go into the red, and then thanks to all this delta, that by that time it should increase even higher than just 365K, meaning that there will be more shorts in risk of liquidation, and that could be the trigger that takes you to 64K. Leverage squeeze has been really great in the past few days. 15%, that was the total return from this long. The actual short squeeze played out. I was expecting it to go even higher, but well, 15%, we cannot complain. And we also got a short signal here that is also playing out right now. The yellow and the blue signal have been really great during this bull market, whereas the red ones play out excellent during the bear market. Right now, the red ones, I tend to ignore them a little bit. On trading light, we can see that the level of 52, that was really sneaky. What was that level doing there? I posted this on Twitter. We couldn't find really an answer, but that level a few hours ago with 1.2K, which is really significant, seems to have flipped to 59.5. There's also a new level with 1K at 59, so those two levels are really significant, holding that 60. So if these two levels are to hold and then bounce at the moment that the price gets to 60, it could attract a lot of damn money into shorting. Let's see if that bounces from there on the lower time frame, and let's see if it can get to 64 to take that back level of liquidity later today or maybe tomorrow. If we look at the 6 months, we haven't looked at this in a while. You can see that the largest levels of liquidity are still below 55, spanning all the way to 52. And the largest level of liquidity in the upside is at 76. This is more like a long-term view of the sentiment. Going to the 3 months, we see that we are still in this sandwich of liquidity on the upside, and on the downside, this is consistent with the 6 month. And I remind you, my hypothesis is that it's really weird that we don't take this, given that we are so close to it. The attention in Bitcoin has reduced to 21, so it keeps doing lower lows. It seems that the trend is to run away from Bitcoin because that's it. That's the end. And in my opinion, that's something that eventually is going to play out as a bullish thing, especially if all the people that bought when Bitcoin was at a level of 50 in terms of interest, that's what the whales want from that people. They want them to panic sell, they want the price to collapse, and they're waiting for greater opportunities to re-enter. Since we had the collapse of Total Free with the altcoins, many of you that are holding altcoins are feeling the pain of that pullback that Total Free had in the past month. Of course, the best performing bot at the moment is the statistical arbitrage trading that has been consistently doing around 10% a month and not really caring that much about the movements and the trend of the market. This particular bot takes a combined position of long and short. It's a market neutral strategy. Messenger is also in the recovery from that collapse, so I'm hoping that they continue to recover in the next months. If you want to invest in any of these bots, there's a link in the description that says copy trading. And if you're trading crypto, whether it's altcoins or Bitcoin, my preferred exchange is OKX. That's the one I use for my trading. Currently, I have a pool of 60,000 in rewards, have a look at the description. And if you want an exchange that is much more KYC friendly, if you don't want to do KYC or you cannot do KYC to access perpetuals, have a look at BingX. There's also a reward for 6,000 if you open an account with them. During the weekend, I'm gonna be traveling, so I doubt that I will be able to do a very detailed video about the market. If something happens, I might upload a video from my iPhone to let you know critical levels breaking. If this video gets over 50 likes, I will do a live stream later today, and then we can look into the altcoins and some opportunities. Thanks so much for watching the video. Have a look at the links in the description, copy trading and my 2 favorite exchanges. That really supports the channel to continue doing what I love to do. I'll see you next one. Bye bye.